This is my favorite setup on a gap down day, specifically in an uptrend, and this is what we're going to be looking for. So a couple of indicators I have on my screen. I'm just going to vaguely explain what this one is. What I'm looking for is when we are opening the market below what I call to be the lower mid, which is basically the bottom 25% or lower of the prior day's range. So that lower mid is plotted by this green line. And anytime we're opening below this green line, which here's the open where my cursor is right at 930, you want to be looking for reversion back to the top. I explain it as a beach ball underwater. That trend is not ready to continue lower. Every single prior day, if you go to the daily chart, it's just an uptrend. Take a look at this daily chart, just floating higher, floating higher, floating higher. So when you're floating higher, you want to be very cautious about getting too aggressive to the downside. And if you're going to want to trade to the downside, make sure we're staying below that bottom quarter. Because if we don't have any volume below that bottom quarter, that's probably telling you that the market doesn't have the continuation pattern to stay below that. So one of my favorite setups is anytime we're going into the open, so before the 9:30 New York time frame, that if we're below this green line, which is the bottom quarter, that's called the lower mid. I'm looking for any semblance of a long setup. Now, there's a couple of different things here you can determine. One, fair value gap. Okay, we have an inverse fair value gap. We have this fair value gap lower, but then on the bar at 8:40 in the morning, we put in a fair value gap higher. This becomes your support level. We also put in a swing low. I determine a swing low by any low that is not taken out for 5 bars. So that means this 835 bar becomes a swing low after 1, 2, 3, 4, after 5 bars. If we haven't taken out that low, you can start looking to trade against it. We open up, there's a 50% retracement here, little fib level that, sorry, let me draw the proper high. Little fib level, you have a fair value gap, also potential support level. We're below that lower mid. What you're looking is for a reversion back to the mid. Okay, and back to the mid is this blue line. So if you're ever in a situation, the market's been uptrending, you're getting a pretty big gap down, ask yourself, are we going to continue? Chances are in an uptrend on a gap down, you're probably not going to continue. And as soon as you start seeing evidence of a low, which is a fair value gap higher or a swing low that doesn't get taken out, you want to be trading back in the direction of the general trend, which is higher. Both of those were perfect by like 9 o'clock, so 30 minutes before the open. You better be in your shotgun seat ready to fire. If you're a trader, don't be showing up late unless you really just don't want to trade that morning, which is fine. But this setup, going into a gap down below the lower mid, be looking for those fair value gaps, be looking for those swing lows to get put in, and then take that trade into the direction of the trend. And this is one of my favorite setups I'm sharing with you guys. If you guys want this indicator, let me know, and I'll drop a link. Take care.